The language around Bitcoin is utterly fantastic. Crypto winter, the halving, the imagery of Mount Gox and mining. All of these spark the imagination and lure curiosity in a way that's kind of muted when contained in the legitimized wrapper of an ETF. As of February 2nd, the total assets in Spot Bitcoin ETFs was about $28 billion. The majority of that pie is still held by Grayscale's GBTC, since they uplisted their $28 billion Bitcoin trust. But every day since January 11th, when the Spot Bitcoin ETFs launched, that slice has gotten smaller. GBTC charged about 2% as holding futures, and when it was uplisted to Spot, they dropped it to about 1.5%, which is still more than 4 times most of the rest. Bitwise is 24 bips, while BlackRock, ARK, Fidelity, and others come in around 40 bips. Many BDs, like Commonwealth, are not allowing them yet. Some, like Cetera, are working on what to do with them, while Cambridge and LPL have put in place trainings that one has to complete in order to use them. We all know it's a volatile, speculative vehicle, but it's worth digging into this a bit if you're going to be making recommendations or accepting a request to hold these in client portfolios. Kathy Woods says that a single Bitcoin will be worth $1.5 million by 2030. That's a roughly 76% annual growth rate over the next 6 years. Awesome. Sign me up. However, in the first 7 days of trading, Bitcoin dropped about 20%. In the TradFi world, we call this a bear market. But in the crypto space, it's just Tuesday. In fact, Bitcoin has dropped 20% in 90 minutes before. Looking back from its peak in November of 2021, 2 months later in January of 2022, it had dropped 50% and was down 77% by mid-22. It's also been up 300% in a year as recently as 2020. This is going to be a tough one to manage. It's got tons of attention, it's wildly volatile, and a small allocation could easily grow in significance if we hit a hot streak. Having patient, ongoing conversations will be key because it could be a behavioral nightmare. Since Bitcoin seems to be somewhat correlated with stocks, it will be even more important to have hedged equities as a potential counterbalance. Take care.